Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be breaking down the strategy that you need that will make you profitable, right? So this is going to be the strategy that you need to become profitable, right? I don't know if you've been learning ICT for a while, or maybe you'll be learning SMC, but guys, this is going to be the strategy that will make you profitable. And guys, this strategy is called the ICC concepts, right? So if you don't know what the ICC concept mean, it basically means indication, correction, continuation, right? So essentially guys, the ICC strategy is a way you look at the market, right? So the ICC is in three phases, right? So the first phase is going to be the indication phase, right? So indication phase basically means price giving you a direction of where price wants to go, right? So it's giving you a sign of where price wants to go. So in this case here, price is looking to go up, so price buys up here, which gives you the indication, right? So that's the first phase. The second phase is going to be the correction phase, right, where price is now retracing or retesting a specific level, right? So we haven't taken our trade yet. We wait for this phase to finish, and then the last phase is going to be the continuation phase. This is now where we find our trades, right, and we are looking to ride the trend, right? So essentially guys, this is how you look at the market, right? So indication, correction, continuation, and then guys, it basically repeats itself. And as you can see, you're looking to buy in this specific market here because it's trending up, right? Now guys, when it comes to understanding how to trade the ICC concepts, guys, you have to understand these three terms here. These are the most important terms that you need to understand the ICC concepts, right? So the first term is going to be your pivot points, right? So this is going to help you know what the trend is and help you follow the trend, right? So what a pivot point basically means is the highs and lows of the market, right? So let's say price is buying, right, or let's say price is selling in this case here. The pivot points are basically the highs, this right here, boom, right? And then let's say price was buying here, right? The pivot point is going to be the lows, right, like this, boom. Now guys, you have to understand how to find your pivot points, right? Because guys, you see how price is trending here, guys. You might think, oh, like each individual like high here are your pivot points, but that's not the case, guys. There are some areas that cannot be counted as pivot points, right? So let me break down exactly how you'll be able to find your pivot points. So essentially guys, your pivot points are basically determined by at least two solid candles, right? So depending on what the trend is. So in this case here, let's assume that here the trend is currently sells, right? So your pivot points, which is the highs here, the authentic highs, are basically, right, at least two candles, right? So in this case here, this would be your pivot point here because price is currently selling. So before any of this happened here, when price is selling here, this is going to be a pivot point here, right? Price then now created a low, right, came again, created a high here, then created a low here. So once price created a low here, this will be your pivot point right here, right? Not this high, because this high here does not have at least two solid candles, right? In this case here, price created a low here, so this would be your pivot point right here, right? Because price has at least two solid buy candles. So in this case here, when price created a low here, right, this cannot be your pivot point. Why? Because it has only one candle here, right? So this would be your actual, you know what I mean, pivot point right here, or this would be your previous high, right? So what basically that means is, let's assume right now this is where price is right here, right? Let's assume this is where price is right here, right? In terms for us to know when price wants to buy, price literally has to break and close above this high right here, right, in terms of the body close. So once that happens, then we know the trend has changed, right? So this is basically what the pivot points are. And then in terms of buys, right, let me break this down. In terms of buys here, your pivot points, right, would be basically this right here. So let's assume before this move happened here, right, your pivot point is going to be here, right? So you can actually use this as a pivot point here, right, because it has at least two solid sell candles. Now this one here cannot be your pivot point, right, because price does not have two back-to-back sell candles here. It has one, but then, you know, even here too, it cannot, because this is the low right here, and this low is only supported by what? One sell candle here, right? In this case here, this was the actual low here. Now, when price created this high, this was the low that price needed to break for the trend to change, right? In this case, price did break and close below this, but as you can see, it reversed here, right? But you have to understand something, guys. In this case here, right, when price, you know, broke below this previous low, obviously we're anticipating price to give us a correction, right? Because this is going to be the indication phase and then a correction, right? But in this case here, this correction phase now turned into an indication phase and then continue to buy up here, right? So in this case here, this would be a correction entry, right? But in this case here, guys, at the end of the day, right, it's not going to be concrete where if price breaks a low, then it's going to automatically change trend. It's not going to be concrete all the time, but in this case here, it was concrete where price created a low here, it broke a low, right? And then it sold. And then as you can see, it kept on maintaining that same, you know, logic where price has at least two solid sell candles or buy candles in this case here, because price is selling down, right? So that's the first thing you need to understand, the pivot points, right? Now the next thing is going to be your area of interest. So this is going to help you to know where to take your trades, and then this will actually help you increase your win rate, right? So in terms of area of interest, guys, it's basically means the separation between buyers and sellers, right? So in this case here, imagine if you are taking your trades only from the white lines, right? So imagine taking your trades from this white lines here, you'd have taken high probability setups, right? As you can see, boom, right here, right? And essentially, guys, how you find your area of interest is basically just finding the separation between buyers and sellers, right? So in terms of, you know, what time frame I use, right? I only use 2 time frames, but I'll get into that later. But in terms of the area of interest, guys, you have to learn the separation between buyers and sellers and how to mark it, right? So if I was to go to, let's say, L2C USD real quick, right, you can see price reacting off of this zone I marked up here. This could be an area of interest. And also, you can also see price creating and respecting this blue zone here. This is actually a pretty old chart, but right, it's also respected this area of interest here, as you can see, right? So price came, I marked this area of interest here, price broke, and then as you can see, separation between buyers and sellers. So above this line, price was bullish, below this line, price was bearish. As you can see, price now broke above this, came back, retested, and then gave you an entry to then now buy up, right? We can open a random chart too to just show you how to mark up your area of interest. So they just use Euro odd, right? Reset chart. So like I said, area of interest basically just means the separation between buyers and sellers. So in this case here, we can see like, okay, this area here is looking like an area of interest, right? Where above this area price is buying, below this area price is likely going to sell, right? And then we could do something like this also, boom, something like this, not too big, let's say something like this, right? Because above this price is buying, below this price is selling. So this is basically how you find your area of interest. And then in terms of your time frames, guys, at the end of the day, guys, you know, you can use multiple time frames, but for me personally, I like to use only 2 time frames, especially when it comes to, you know, figuring out, you know, how to find your area of interest, and then, you know, basically following the chart. I use the daily time frame and also the 1 hour time frame. And then sometimes I use the 5-minute time frame to look for that like snipe entries, but the 5-minute time frame usually for the snipe entries, but then the 1 hour time frame is usually where I get most of my entries from, right? And then the daily time frame is basically to look at the macro point of things, right? So in terms of tying everything together, guys, let's break this down succinctly. So if I was to add GBP real quick, or let's actually go to a random chart to tie everything together. So let's just go to GBP NZD, I guess, right? So if I remove my joins, right, now let's actually mark this chart up and tie everything together, right? So like I said, guys, you have to understand, you know, your pivot points and then your area of interest. So the first thing I do, guys, is I go to the daily time frame, and then I look for the daily time frame area of interest, right? So like I said, the only time frames I use is the daily time frame and the 1 hour time frame. So I first go to the daily time frame to look for my area of interest. So this is the daily time frame, and like I told you, my area of interest is basically the separation between buyers and sellers. So right now I am seeing something here, right? Boom. I'm seeing something here real quick. So this right here, I'm seeing something like this, right? So boom. And then like I told you guys, I always like to color code my drawings. So the blue represents the daily time frame, the white represents the 1 hour time frame. So I do see like a separation here where above this price is buying, as you can see, and then below this price is reacting in sells. So I do believe price is my likely, sell for GBP entity, but let's, keep trading. So again, I do see another area of interest here, right? So something light like this, right? So you don't have to mark like every area of interest you find, but as you can see, like this is literally spot on in the sense of above this price is buying, right? Below this price is selling, right? And then we could see what is here. I could like do something here where like this area here, technically speaking, but this kind of like a huge area, but still the same thing technically speaking, right? Because I can do something like this and then increase this, right? But this is too much, obviously, so I will actually not even mark this. I'll actually just likely keep price like this. Sometimes some people might do something like this where we can see like a trend line, but I really don't use trend lines. I'm not really a fan of trend lines, right? But this is basically what I see in the daily time frame. And then if we go to the 1 hour time frame, right, this is where I usually follow the day-to-day things like day trading, right? So I do see an area of interest right here, right? So clearly we see an area of interest right here, and then color code, boom. And then let me see, do I see any area of interest? I do see like a small area of interest here, but I won't mark this up. So it's looking like a choppy market in a sense, right? So we can see it's a little bit choppy. Maybe you could call this like an area of interest right here. Not even maybe. This is an area of interest, right? So boom. So let's see if it does extend. It extends a little bit, but yeah, I'll probably mark this as like a new area of interest, right? Because it respected it from this point, as you can see, 1, 2, 3, right? So we might anticipate something happen here. So I can anticipate something like this where price will like come here, sell a little bit to this area here, and then buy up here to then now sell. You feel me, right? And then the reason for this prediction is because there is like this small area of interest here, right? So something like this. But and we obviously know, let's say if price was actually going to sell, price will not like sell the first time, right? It's actually going to, create liquidity where sellers are going to put all their entries here, all their money here, and then to take you out before they're now selling, right? But it's basically the strategy that you need. And then in terms of your pivot points, right? So right now, the pivot point, we have to actually track this, right? So the latest high right now was this high, and then this was the low that price needed to break. Price broke that low, right? So let me break this down for you. So as you can see, if we have to track it from here, right? Price was in the uptrend here, right? So this was the high it created. This was the low that price needed to break. Why? Because this had at least 2 solid sell candles, right? So we had to wait for price to come all the way here for it to, sell. So price now finally broke with this candle. So price is now bearish, right? So now price is bearish here, but now what is the low that price needs to break? What is the high that price needs to break for us to say, okay, now price is bullish from this area here? It's going to be this high here, not this high, because this high has only 1 candle, but this high here has at least 2 solid candles, right? So it's now move here, and they'll now look for price. Price now bought, came all the way up here. Now this is the high, this is the low that price needs to now break for us to now say, okay, price is now bearish, right? And then price now comes here again, breaks it, and then it's looking bearish again here. It sells a little bit and then buys all the way up here, right? And then this is now the high that price needs to break. Boom, it breaks it. So right now I do believe price is bullish, right? And then this is the low that price needs to break for us to say that it is bearish. So this will be the low right here. Right, something like this. Why? Because it has at least 2 solid sell candles. In this case here, this only has 1 candle, right? This here, it has 2 solid candles, but this low has not created a new high. Until this low creates a new high, then we can now call this, you know what I mean, the low that price needs to break. But for as of right now, this is the current low that price needs to break. So it has to come all the way down here if this candle doesn't close above this, right? So if this candle creates a wick, then it's likely going to sell from here as a correction phase to this area before it either buys up or it sells or something like that, right? But this is basically a strategy that you need, guys, right? If you do want to learn more about this, you can always use my ebook, right, in the link at the bottom of this video. But yeah, guys, I hope you guys enjoyed this video, and I will see you guys in the next video. Peace.